In this video, traders, I want to talk about how to eliminate those impulsive trades. Stick around. Hey guys, warm welcome to you. All right, so I'm going to try and distill as much as I can in kind of 5 to 8 minutes. That being said, let's talk about this now. Eliminating impulsive trades. Okay, the easy trap to fall into here is for me to say, right, you're going to do this, we 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 do this. And these are all valid things that we kind of toolkits that we use to kind of prescribe, if you like, to try out, hey, does that help reduce your impulsive trades? But that's not the answer. We need to go back a further step. And you need to ask yourself this question. Why? Why am I taking these impulsive trades? And it's not going to be the first why, it's going to be the fourth why. So why am I taking these impulsive trades? Well, because I feel like the market is going to do something. Why? Well, because I see that this price is going down. Why? Well, I quite like to make some profitable trades here. Well, why? Well, because I feel like I want to become a trader. Well, why? Because that's what I've told everyone I'm going to do, and that's why I've kind of set my goal as. Why? Well, I really like it. And you're going to go down this thing, and actually you end up getting to kind of a couple of results. Or a couple of final points, if you like. And the reason you take impulsive trades can vary, but some of them are this. Number one, you want to make money. Pretty simple. You're like, hey, I want to make money, and I have a belief that trading, being in a trade, is the key to me making money. And so if we attack that, we need to break that connection and say, hey, sitting on hands is going to make you money, and we almost swing to the other direction and then we pull you back in. So we say, hey, stop trading, leave loads of trades, wait for loads of trades to go by without you, all that kind of stuff, and then you kind of start to put it back in, and so you overcompensate. The other one to do is you say, hey, I'm feared of I've got a fear of missing out, and I'm frightened. I don't want to miss out on a big move. I'm waiting. Again, that's probably linked to money, but there's something slightly different about that. It's a case of saying, okay, my impulsive trades are because I feel like it's just, and that then becomes a game of you need more strict rules. You need stricter rules so that you can follow this process, and so there's only that much flexibility. And so you go, right, these are the rules, these to make sure I don't have FOMO and don't chase stuff that isn't right. There's a little bit of flexibility there, but rather than at the moment you might have a kind of a couple of rules and big flexibility, you flip it and go, right, binary, flexibility. It's not how you're going to trade forever, but it kind of is a good way to break that thing of impulsive nature. The other one might be, okay, well, I am a day trader, and I feel like I should be trading. I feel like I should be doing something, right? So this is the kind of deeper feeling of meaning that I should be taking some action during the trading day. If I'm sitting in front of the desk and I'm supposed to be making money, then I should be taking some action. And so if I see something slightly going on, then I'm going to do that. So the prescription perhaps for that is to say, right, listen, let me just look at your results, or look at your own results. Look at your best trades, and imagine if you took all the risk on your trades and allocated it to your best trades. What position would you be in? You're like, oh yeah, you're way up. Okay, now that's unobtainable, but what if you could do some of that? And that would involve reducing all these rubbishy trades and allocating that risk to your better trades. Because by default, you're saying I'm going to risk X per week. If you eliminated the trades that were the poor impulsive trades, and you allocated that valuable risk to those other trades, you're still taking the same amount of risk per week, but you're now in the better trades. All of a sudden, that transforms your P&L. And so sometimes these type of things open your eyes a bit and go, yeah, the impulsive trades are what's killing me. Another thing you can do as well is to look at the impulsive trades and go, hey, if I just didn't do them, where would I be? And often that is in a way better position. And so thinking clearly about this type of stuff and thinking why, and then coming up with a solution and a way to solve this. Another kind of big thing of impulsive trades is I get sucked in by the price movement. If that's the case, it's like, okay, there's an operational change to make. The operational change is to not be looking at that 1 minute chart, or that multi-tick chart. It's to always be looking at your 5 minute perhaps, and then only going down into the execution chart when you see something. Or it might be, hey, one thing we did recently with a trader was, before you take a trade, bang, you start a timer. And that timer basically counts down, allows you to only take the trade once the timer's done. Short timer, but it gives you a chance to assess all the conditions of the trade, all the parameters, all the filters, all the filtering criteria, and then decide if you still want to take the trade. And if you still want to take the trade, after the time is done, you can take the trade. Now, the pushback from that is, well, I'm going to miss trades, I'm going to miss trades. That's fine, that's the point. The point is you want to get you comfortable with missing trades, and that will mean that you miss a lot of rubbish trades. You might miss some good trades, but that's still going to be beneficial to you. It's still going to work for you. But what it does is it kind of creates a habit of, rather than clicking the mouse when you see something, it's bang, timer goes on, sit back. And this internal dialogue is like, I want to trade, need to do something to trade. You can do it when that time is done. Let me look at this, look at that. And you might go, you know what, I don't want that trade, or I'm going to structure the trade here, I'm going to put a limit order in here, or I'm going to put a stop order entry here, or whatever it may be. You might change the way that you view that chart, or you might just want to take the trade anyway. But the point is, it just adds that little circuit breaker and a little bit of friction between you having the impulse and doing it. So we're just changing the habit of impulse to trade to impulse to start the timer. And as soon as you can kind of switch the habit, it was Atomic Habit, James Clear, who said, hey, you can't take away a bad habit. What you can do is you can replace it with a different habit. And so if you replace the impulse to take the trade with an, I'm going to start a timer, then, whoa, even if the time is a minute, right? It's just enough to put the friction in. But ask for the why first. Why am I taking impulsive trades? Why? Try to get the answer, and then try to look at the solution. Do I need to trade kind of smaller size? So the frequency needs to be lower, my style, and I kind of just enjoyed these down here, but I talked about most of them kind of earlier. But that's the way to approach it. Is to say, why am I taking it? Not just beating yourself up about it and kind of looking yourself in the mirror and go, why am I doing this? Ask yourself why. Sit yourself down, but ask yourself in a different tone why. Not like, why are you doing this? You're an idiot. You can't trade, you're an idiot. No. Sit down, just reflect. Sit with a notepad and just imagine if you were talking to someone. Say, well, why do you think you take those impulsive trades? And let the answer come out. And then when the answer comes out, then think about the way to operationally deal with that. How do you take yourself out of those situations, and then mentally how to deal with that. And then, over time, it's not going to be instant either. You're not going to go, oh, I've fixed it, tomorrow I'm going to do this, it's going to fix it. No, it's still going to happen. But if you work on it, you persevere with that one thing, in a very short period of time, you can be really, really reducing those impulsive trades. And if you reduce them by half, what a better position you'd be in, let alone if you got rid of them altogether. So something to think about. Take care, guys. Keep your risk managed. I'll see you in the next one. Bye-bye.